Hi, everyone. Thank you so much for being here. We have a great video today because we have a very special guest. Her name is Katrina Weaver, and she is a lending professional that has been serving the Triangle for over 25 years. So she has a lot of knowledge, needless to say, and she's seen a lot in the lending industry. So she's going to kind of help us kind of figure out what to do now if we're trying to decide, is it smart to buy in the spring market here or just anytime in 2024? Hi, Katrina. Thank you so much for being here.
Hey, good morning, Mandy. How are you doing?
I'm doing good, thanks. I think what we're going to do with this video is we're going to do like three parts because we want to talk about three key subject matters. Number one, does it make sense to buy in 2024 after everything that's been happening in the market? Next, we're going to talk about some options for buying if that's what you want to do. And then lastly, we're going to just talk about first steps that you can take. Katrina, we all know that we saw amazing interest rates back in 2021. Some people still have interest rates that are in maybe the twos or the threes. They might want to move, but they're just really afraid to let go of that interest rate because they have a low payment. But their life is kind of dictating for them to move forwards. What is your thought process about that right now? How are you advising people, or what do you think about that?
That's a great question. Every person's situation is going to be different. And what I encourage my customers to think about is not so much what is the interest rate, but and what most people care about is, what's their payment going to be?
Hmm.
So there are a lot of things that are going to go into figuring that out. I've got a lot of customers right now that their thought process is, what value does this move have? What is their motivation for moving? Are they expanding their household? Are they downsizing? And really look at what are they really willing to pay in a difference to make that happen. A lot of people have a ton of equity in their house right now.
Hmm.
So again, it may be a situation where, okay, they've got a 3.5% interest rate and maybe they're going to go to a 6.5% interest rate, but maybe their original mortgage was 400 or 500,000 and they've got $300,000 in equity now. Putting that down on a new property, they may have a smaller mortgage amount. So even if the interest rate's a little bit higher, the corresponding payment may not be that drastically different. It's really going to come down to just trying to look at how much more is that payment going to be, if it is indeed so, and is that comfortable for the customer? Obviously, nobody wants to spend more than they have to, but if they're getting a bigger yard, if they are going to be moving closer to their parents, whatever's motivating them to move in the first place, taking a look at what value is that going to have to them. And then there are different things that can be done, and we can talk about this a little bit more as we get into things, but there are things that can help mitigate that monthly payment because that's really what people care about. It's not, the interest rate's a bit arbitrary. Obviously, it does impact your monthly payment,
Hmm.
but looking at ways other than just the interest rate where they can mitigate that payment and make it comfortable. As long as the payment's comfortable, as long as they can afford it, and as long as that new mortgage, that new house is going to provide some type of value to the customer, that's what we really start to look at and figure out.
I really like that big picture because everybody's motivation for moving is different. What's your pain point that's going to drive you to say, all right, let's pack up everything and move somewhere? I mean, because, moving is not fun, as we all know. What are you going to gain? What is the value add by actually moving? Everyone's circumstances are different. And I like the point you made about the equity. That equity could offset or provide a comfortable payment that you're not thinking about because you're just so focused on the interest rate. From what you're saying, it's probably good for everybody to really speak to a lender to kind of understand what that big picture is. So I like that. That makes sense. So does a home buyer need to speak to a few lenders? Will different lenders offer them different loan programs or, rates and I mean, will they offer them different products essentially?
To a degree, I mean, I'm a full service lender, so I offer pretty much every type of mortgage that's available out there. Conventional, VA, FHA, USDA. I also do a lot of specialized loans for people that maybe have non-traditional types of income. So people that are self-employed. We can use bank statements
Mhm.
to qualify them instead of tax returns or pay stubs or things like that.
Okay.
Investors, we have programs for investors where we don't even use personal income. It's based solely off of the cash flow of that proposed rental property. I would encourage anyone to find out, what their needs are, and then, maybe reach out to a couple of different lenders. Some lenders are going to be more full service and offer a huge array of programs. Other institutions, banks, a lot of times may have a more compact toolbox of programs that they can offer.
Mhm.
I think it always makes sense. I mean, even me as a mortgage professional, the times where I've gone to get a mortgage myself in the last, over the last 10 years,
Uh-huh.
I'll talk to a handful of other people, because and it's not always about who's got the best interest rate. A lot of times it's going to be who's going to give the best advice, who's going to be the most knowledgeable, who's going to really take time to get to know that customer and find out what that customer's needs are.
Right.
It's not always, what's the lowest 30-year fixed rate. That may not be what's in the best interest of the client. It's a consultative process about finding out what any individual customer's objectives are, what their means are, and what their needs are, and then really kind of trying to put all of those pieces together. For me, every customer is a pleasant puzzle to be solved. They're taking all of the components of their financial situation and trying to find the best way to make those numbers agreeable for them.
Right. I like that. How can we help you achieve your goals? What are those goals? Let's outline those first, and then we can design a plan on how to achieve them and get to where you need to be. I like that a lot.